Well, hello everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong. I'm a coach with Schwab and delighted that you are joining us today. So today, what are we going to talk about? Well, I thought we'd do something just a little different today. We're going to talk about adding longer term positions to a portfolio and what kind of price patterns might a trader look for or an investor look for if you were looking to add something to your portfolio on perhaps a little longer term basis than what we typically look at in this class. So we're going to look at a bunch of different price patterns today. The first part of the class has been sponsored by the letter A, but we're going to look at 3 or 4 new positions. One of the things that I'm often asked also is, how do you pick the stocks that you do? And so we're going to go through how I went through that process, and we're going to look at a couple of patterns that maybe aren't quite there yet. So that's what we're up to for this class. If you are not following me on X, I can consider this your formal invitation. My handle, Barb Armstrong CS. We also have the fabulous Mr. Kevin Horner in the chat with us today, and you're going to want to follow him on X as well, Kevin Horner CS. So be there, be square. You know, I'm posting charts and motivational things, like all kinds of stuff. So it's just great content, another free resource that you have access to. Know that when we talk about options, those carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform to place our example trades. And all of you have access to a Paper Money account on your Thinkorswim platform as well. It is a brilliant place to practice, to make sure you understand the platform and, more importantly, the trading strategies that you are considering trading. Okay. Know that if we do something like selling a covered call or we do anything with a short option, those can be assigned at any time, regardless of how far they are in the money, but they'll never be assigned early in Paper Money. And we have one position that we might look at you know, in that regard, where it's currently in the money, but it will never be called out in Paper Money. Now, a couple of quick announcements. One is that this is the last time I am officially teaching this class. Next week, I'm passing the baton over to a young woman named Rachel Dashel. She is fantastic, and I can't wait to see what she does with this class. She's new to the coaching team, but has been with Schwab for a while, so can't wait to see what Rachel does. Now, I have treated this class in the past as a companion class to the Trading a Smaller Account class that I teach on Monday and Fridays. And there are a few people that have said, is Rachel going to continue to do that? And no, I'm going to continue to teach those Monday and Friday classes. And so Rachel will be teaching this as a standalone. Okay. Yeah. So I want to thank all of you who are here and who bring this class to life by joining us live. I know that there are thousands more that watch in the archives. Red Solo Cup has been on hiatus. He couldn't figure out how to find us, but did. And so we're so glad that he's back. And to Will and Chris and Lola and Scott and Jack and the rest of the gang, Sharon and Josie, thank you all for being here and for being so participatory. If you are brand new to this class and joining us for the first time, you know, we link arms here, you know, and there are classes taught from the time the market opens at 9:30 until the end of the trading day. So just, and beyond. So just know that we link arms here on a regular basis and are learning from each other. So feel free to join us and join this community. So we're going to do, that's one announcement. I have one other, and there are lots of changes on the schedule coming. So just be aware, if you show up and it's not the usual instructor or the usual class, there may have been a change. And so to see those changes, if you come to schwab.com/coaching, now this is the live events. But if you come to live webcasts, we're now at the beginning of October. And so you can see, here's our Wednesday, opened with Kevin Horner, and he does a Trader Talks class 4 out of 5 days of the week. So I am doing a far more compressed market overview because Kevin does such a great job. If you want an in-depth review, please feel free to go and watch that. So we've got trading price patterns today with me, and then next week it will be Rachel. Okay. And there are some other things moving around as well. I'm not going to go through all of them, but if you want the schedule, this is the easiest place to find it. Now, the next thing up, Kevin and I, along with Ben Watson, will be hopping on a plane on Friday. There's a big market drive happening in Chicago on Saturday, and it's not too late to join us. It's in Schaumburg. So if you have never been to one, they're really epic events. We'll have the coffee on, we'll have breakfast ready, we'll have a lunch for you. We have a great reception at the end of the day. So we'll feed both your mind and your body. And it's all complimentary. We'll even pay for your parking. You just have to get yourself there. Okay. So, and then that's followed by a 2-day event in Orlando the following weekend, and then a market drive in Anaheim. If you want to see where we'll be come the new year, you can come on out, and we do have the schedule posted through the end of the first quarter. Okay. And I got introduced to the world of investing back in 2011 at an in-person event like this. I was a big fan of them as a client. I'd get on a plane and fly to DC or like wherever I had to go. I just loved being immersed in this community. And, at the time, I had a house full of crazy teenagers. So it was kind of nice to be away from the chaos of day to day. And so if you've never attended a live event, I would highly recommend it. So Princess is Investing is saying, I'll see you guys in California. So I will look forward to that. And please come up and introduce yourself. We'd love to see you, shake hands or give you a hug, whatever. It would be great. So don't be shy, if you come to these in-person events. Okay, so we are going to start by looking at the S&P 500. And, hitting a new all-time high again today. So it's hard to describe that as anything other than bullish, right? Right. And then how about our NASDAQ? Well, we're not hitting a new all-time high, but we're within a short putt of it. So, NASDAQ uptrending as well. How about our small cap? So this is 2,000 of the smallest, of the biggest of the small boys is the way I like to describe that. And that hit a new intraday all-time high, within the last week or so. And then our Dow 30, and this is different in that this is based on the price of the stock as opposed to the market cap of the company. But, it hit a new all-time high within the last a week or so as well. Okay. Yeah. So Steve is saying he attended a technical analysis live event last year and it was awesome, and tried this year and it was full. So I would say if you live in the area and registration is closed, you can come, and as long as we have a seat, we'll find a spot for you. You can register at the event. But what you want to do if you're thinking of coming to a live event, they're free to attend. So there's no cost to register. Get your name on the list sooner rather than later. Yeah. And LH is saying that he's new to investing and everything related, and he didn't realize that Schwab offered all these webinars, and it's amazing. It is amazing. And the fact that it's all free is even more amazing. That it's, yeah. Okay. So that's what's going on there. Okay. Now, if you want to see the sectors, and somebody said, I'm new to all this, how do I see the sectors? So if you come down here, sector indices, this is a public watch list on your Thinkorswim platform. This section over here is called the gadget section. But, we don't have to show this amount. We've got lots of money in this. You know, it's a paper money account, so you can add as much money as you want to it. But I customize this. And so if you add a new watch list, and let me just add, let's just change this live news. I'm going to switch this to a watch list. And this is how they come up. And so how do I get mine? Because S&P 510 doesn't tell me anything. And so what I did is I came over to this little sprocket, if you're new, and I said, well, I don't care about the bid or the ask price, but what I want is a description. So I want to add that. And I want that to be, oops, I didn't mean to take it away. Okay, so we've added it. Description, add. Okay, description, add. And then I want it to be up closer to the top. And then the other thing that I wanted for this was a 4-week return, which is a custom script, and that's in the post pinned to the top of my feed. So I added the 4-week return and the 3-month return. So that if I want to quickly, so now I can see all the sectors, and if I very quickly want to see which have been the strongest sectors, tech, utilities, communications, and consumer discretionary in the last 4 weeks, over the last 3 months, tech, communications, consumer discretionary. So I can click on tech, see it's hitting a new all-time high. Communication services pulling back a bit. Consumer discretionary, you know, it's been strong. Even if we look at energy, which was kind of on the struggle bus, you know, it's only up 5% year to date. But, you know, seems to have had a, broken out to the upside from this panic pattern that it was setting up. Okay, so this is just another resource that you may want to take advantage of. Okay, I'm going to switch this back to news. And why do I do that? Well, let's go to our first example today. And one of the things that I did, if you're looking for, like, how does she come up with these examples? I just went to the NASDAQ 100, and then I sort alphabetically so that if the price is changing, I don't want to sort by, you know, the one that's the most bullish today, because then the prices keep changing and I don't know what I've looked at. So if I look at Apple, well, you know, if we look at the NASDAQ, I didn't point this out, but it's up almost 17% year to date, right? And then we look at Apple, it's only up 1.6. So, you know, and this is a 1-year chart. If I make this a year to date chart, we can see that it's like this big kind of bowl pattern, and then recently broke out, and it's been kind of consolidating. Like we would call this pattern here, this uptrend, and then like this, like a bull flag and a stiff wind. But we have this diagonal breakout, and then it's been consolidating. And so some might say, well, you know, what other factors might you take into consideration? And this is a class where our focus is on the technical analysis. We're looking at trading price patterns, but some might want to come over here and have a look and see the fact that Seaport Global just initiated their newly analyzing this stock, and they've given it a price target of 310. And, you know, it's currently today trading at 256. So if you didn't have this in your portfolio and you thought, well, I'm coming in just as it's kind of coming back into its own, perhaps it may not hold. But if I wanted to add this to my portfolio, how would I know how many shares to buy? Well, if we had a $500,000 account, we could say, well, we're willing to put up to 5% of our portfolio in any one position. So that would be a $25,000 position. And if we're willing to risk 0.5% on a trade, and we had a $500,000 account, we'd be willing to risk up to $2,500. And so if we bought 100 shares, that would be a $25,601 investment. So that's, in the ballpark of the type of position size that would be acceptable. Now, how much are we risking? Well, technically, we're risking $25,599, because the price could go to zero. Now, what are the odds of Apple going to zero? Not high. But that is technically what your risk is. Like, so if we came here to the trade tab and said, okay, we'd like to buy 100 shares. And if we come to confirm and send, it's saying, this is our risk. We're going to have to take 25,000 out of our account, and that's how much we could lose. But if we put a stop on it and we say, okay, if we're looking at this because it's broken out above here, what if we took this 248, we're expecting this to hold as a support level. So what if I come down here and I just want to add, I'm going to add a calculator. And if I say, okay, I see this 248, let's call it 248 as a support level. And so I'm going to multiply that by 0.97 to say, hey, if it goes more than 3% below this 248-ish level, it's not going in the direction we're expecting. And so what we would like to do is sell our shares. Now, is there any guarantee that we are going to get out at the price requested? No, but it's a way of us managing the potential risk in the trade. And, Apple, when we look at it, it's traded 24 million shares today. So it's a very heavily traded stock. And so if we say, okay, we want to buy custom with a stop, we're buying at 256.22. We want to exit if it goes below 240.56. So, how much are we risking then? Well, if we take our 240.56 and we subtract the 256 from it, about $16 a share, so about $1,600. Is that less than the $2,500 we're willing to risk? It is. So we're buying this as a growth stock. And you could put in the notes, entry based on a horizontal resistance breakout and positive analyst news. And you don't have to put this in here. This is just a note from you to you. Okay? Okay, so we bought 100 shares of Apple. And if we want to see this on the monitor tab, we can come and here's all the growth stocks that we have. And you might say, well, in my paper money, it's not organized this way. Like, I like to see how much I'm up as a percentage, and then what the net liquidating value is. If I were to sell my position in Apple, how much would go back into my account? 25,000. Okay. And then I added sector also. And again, you just click on the sprocket and then you can customize it. I added profit and loss percentage, net liquidating value, and sector. Okay. Okie dokie. So there's our Apple position. Okay, so let's look at example number 2. So the pattern we were looking at here is this big bull pattern where we've had a breakout to the upside. And we're also, kind of looking for something that, is kind of coming back around the bend. And sometimes, that can be an attractive time to enter. Now, there are others who will say, well, something in motion, an object in motion will stay in motion. And there's that consideration also, and we'll look at one of those. But if we come and we look at a 1-year chart, and I think I posted this on X this morning as well, but what kind of pattern do you guys see here? What kind of pattern can I see? Are we seeing? Okay, so yeah, I did post this on X. And so it's an inverted head and shoulders. Obviously my skew is a little off here. We have a range of about 75 and a breakout. It's just we may want to realign it. My chart was a little different. Here's our inverted head and shoulders. And some might say, well, I see more of a cup. Here would be the cup and the handle. Same thing. And you're going to measure the range the same way. And why do we care about the size of this pattern? Because some technicians might say, well, if I wanted to put a target on it, my expectation is that it might move up to around 275. And so you could put a target there if you wanted to have a target on it. Yeah, you're right. Isha is saying an upside down smiley face pattern. Yeah, you're right. Yeah, and Steve and Stephanie are saying cup and handle pattern, and so is Sabri. And you're right that there's every inverted head and shoulders also has a cup and handle, within it. And sometimes you don't have this, you don't have the other shoulder, so it's just a cup and handle. But we could look at this. Some might look at this as a potential entry, because we've got this horizontal resistance breakout. It came up and hit it here and here, and then it kind of broke out and flirted with this 200-ish level. Okay. And then moving pretty dramatically to the upside today. And so some might say, well, I've missed it, Barb. Like, it's already up 4%. This is crazy. And you might say, like, shouldn't I have bought it up here around 124? Well, if your crystal ball was working, absolutely. But we didn't. And who knew when it came up here that it was going to roll back over and continue rolling on down the hill? And so there are many opportunities to enter, and after we place this trade, we're going to look at a couple that are kind of percolating, but that aren't quite there yet. And BJ is saying, attending this class just trains my eyes even more. And that's what I found when I was a client and I first started attending classes, is that the instructor would draw a line. It's like, oh, now I see it. Like, it seems so obvious now, but I didn't see it at all until that line was drawn. And so the more you practice, the more you'll see it. So with AMAT here, if we were looking at adding shares to our portfolio, again, if we have a $25,000 cap, we could buy $25,000 worth of stock, but if we want the ability to maybe, when earnings comes up, add a protective put, or if we want the ability to sell a covered call if we think it's going to pull back. So Catherine's saying, how do you decide your target? Well, you could do a target a couple of ways. So one is we could just add 75 and say, here's this pattern, our inverted head and shoulders, and some might take this range and say that's going to be our pattern. Okay. Now, others might say, and I'm going to add some room at the top here, our price axis. We're going to get rid of that. So others might say, I'm going to use a Fibonacci. So what is a Fibonacci? So if we come here, I'm going to click on this line. This is where it broke out from, and bring it down to this recent low. And so some might say, okay, it's at 213. I'm going to put in I'm going to do this as a shorter term trade, and I'm going to trade it to this 227 mark because I see that as a potential target. And others might just say, you know what? I'm just going to add this to my portfolio, And if it continues to go up, then I'll continue to own this stock. Okay. And in the next, when we look at our next example, because Coach Coco is saying, so when is a growth stock no longer worth holding? Or when might you choose to exit the position? And so in this one, what we're going to do is if this is a growth stock, we're adding this, and as long as it continues to perform, we'll keep this in our portfolio. Where might we put our exit? Well, we might say, okay, this 200-ish level times 0.97. If it goes 3% below that, you could make it 2% or 5%. We're going to go with 3. If it goes below 194, so how much are we risking? 204. We're risking almost $20 a share, 19 and change. So if we have 100 shares, we're risking almost 2,000. So are we okay with risking 2,000? Is it less than 2,500? Yes. And that's, in our theoretical $500,000 account, that would meet our criteria. Now, we're not going to put a target on this one, but if we wanted, we could. So we could say, buy custom with an OCO bracket. And if we wanted to put in that target at $75 higher, well, I'll show you this as an example. So we could say, okay, it's at 213. We want to put our target at 275, which would be a new all-time high for this stock. And our exit is going to be at 194. Doesn't often work out to be such a round number, but there we go. We're going to make both of these good till canceled, confirm and send. And we're going to put this one in a different group. We're going to put this in our stocks with targets, because this one we have a target. So we're risking $19.33 a share for the opportunity to ultimately make 61.67. Now, we might not come down and hit our stop, but we might not hit our target either. This isn't a short-term swing trade, that's for sure. And this is based on the inverted head and shoulders breakout, and the range of the pattern determines the target. Now, is this a set it and forget it? Like, can it either we wait till it hits one or the other? No. And let's look at, when we do the next one, we'll talk about how we might manage these, but let's look at a couple of others. So Datadog, here's another tech stock. Now, if you were playing I Spy with My Little Eye, what pattern do you see? What pattern do you see? So we just talked about these patterns. So some might say, well, I'm seeing this cup and handle. And others might say, here's our cup, here's our handle. And others are saying, well, it's not quite even, but I'm seeing, more like an inverted head and shoulders. And you can look at it either way, but what are we not seeing? Cup and handle, Jay, Cindy, Chris, Stephanie, like Sharon. Yeah, Greg, you guys have got it. But like Noodle Brain says, it's about to break. Has it broken yet? No. And it's up 6% today. So you may be saying, like, Barb, are you new? Like, we need to get in now. No, we don't. No, we don't, actually. And you might say, well, this is what you're seeing, and you can see things however you like to see them, but here's what I'm seeing. And so I'm in. I'm seeing a diagonal resistance breakout. And so if you want to look at it that way, then you're in. And others will say, no, and here's the deal. Here's the dealio. Like, with every single cup and handle pattern, by definition, there's going to be a diagonal resistance breakout, because this pattern has come down and it's got to cross a line somewhere. And so you could just say, this could end up being resistance until I see it come up. And some might even say, I want to see it break that line and come back and retest. Then, like I like to say, you take one hand, take the other hand, and you sit on them until it breaks out. Okay. So it's just one way of looking at it. And, patience, I mean, it's tough sometimes. How about we look at EXC, Exelon. And again, where am I getting these? I just started going down, Datadog, and I hit it. And this is just a public watch list, right? The NASDAQ 100. And then, I got to EXC. And so again, what are we seeing here? And it's kind of a variation on a theme, right? This is the stock, it's up pretty nicely, 20%. It's beating the NASDAQ and the S&P. But since like May, it's been trading in this range. And, when I kind of look at this and, if I'm playing I Spy with my little eye, I'm seeing kind of not quite a cup and handle. I'd call this kind of more of a double bottom, Q queen. So these two big fat bottoms, but like, where's the breakout? It's not there yet. And so what do? Take one hand, take the other hand, sit on them. And again, you might say, hey, but like news flash, we've got a diagonal resistance breakout here. Yes, we do. Yes, we do. And somebody's saying, how about doing an iron condor? Yeah, like an iron condor is a credit spread sandwich where you sell a short call vertical at the top and a short put vertical at the bottom. But, some might look at this and say, but we don't have confirmation yet that this is rolling over. And if I sell it when it's at the top, maybe I leg into it. Like if it rolls over, I add the short call vertical. And then when it comes back down here a little closer, then I add the short put vertical in. A cup and handle may be indicating a trend reversal pattern. And right now, like this is kind of a consolidation pattern. And when are we done consolidating is when it breaks out one way or the other. We also have to keep in mind, we have earnings coming up, right? Right. Okay, how about we look at FANG? Now, this is not, a pet adoption stock. This is Diamondback Energy. And so, here we have a stock that's been on the struggle bus. It's down over 10% so far this year. So why are we looking at it? Well, it started to come up and then it's forming this pennant pattern. And, and it's up 0.5% today, but has it broken out? So if we're looking to potentially add a stock like this to our portfolio, what might we be waiting for? And some might say, don't wait, and others might say, no, I'm waiting for it to break out. And you might say, well, it broke out here. Well, that breakout turned out to be a fake out. And so you might say, I want to see it break out, come back and retest, and then break out. And then I might add it to my portfolio. So I've got a 1-year chart and I've zoned in on it. Like when we get to October, somebody's saying, what type of chart are you often looking at? It depends on the time frame you're looking to invest in. And often we'll look at a 1-year chart and then we'll zone in and get a little more up close and personal. And, if we come back out, so if I come to, oops, that wasn't the one I wanted, to our time frames, and let's say I come to, our year to date, and then I want to zone in, you can just click and drag. Okay. Or you can go back up and pick a shorter time frame. But that's what we're looking for there. And do we have it? We do not. And so again, like just kind of clicking through, you're looking for opportunities. So we, part of our being sponsored by the letter A today, we've now added a position on Apple. We've added a position on AMAT. I want to go and look at one that we did where we did a buy right covered call. The last one we're going to look at is AVGO. And you know, today's theme was let's add stocks to our portfolio. But this one is pretty pricey. So if the most, you know, we don't want to go much over 25,000, we can't add 100 shares of this. But if we had a bigger portfolio and we were willing to, you know, take a $33,000 position, you know, we, as a shorter term trade, if we wanted to do an income generating trade, we could have bought 100 shares and then sold a covered call with the intention of being called out. And we did that on Baker. Oops. And we did that on, oh, was it Baker? It's in the other account. Oh, it was BTU. We did that on Baker and we ended up getting out. It was in the money and we had the majority of our profit. So this one, we just put this trade on last week. And here's our, we did the $26 call. And so the most we can make if we're called out is $26. It's now at $25.42. So the most we can make is another $60 on this trade. Okay. And so this is where now, and the stock is trading at 28. And so, you know, up dramatically again today. Now, if you were in your live account and you were called out for $26, would you be bummed? No. Because you sold this covered call saying, I'm going to make a really nice return if I'm called out. And so I'm totally okay with it. In fact, I've sold this strike with the intention of being called out. And so if you're called out early, you're just doing the happy dance because you got your money back faster. But you could also choose to say, well, I'm at $25.46. I can only make another $54. I'm going to take the money and run. I'm already up 7% on this investment. And I just placed this trade a few days ago. And it's a stock position. And so if you wanted to exit this trade, you'd come up to BTU and you'd say, okay, I'm going to cancel this exit because I'm going to take the money, ring the cash register, and exit the position. So I'm going to come back down to this position. And you can see, you know, it's trading at 28. Our call is at 26. We would get $25.40 for it. So we're going to just choose to take our money. Take that 7% gain. Okay, and that's how we would do that. Okay, so let's do one more example trade. And seeing as we've been sponsored so far by the letter A, we'll stick with A. And this is more like, do we see a breakout? No, this has been since April 7th, which by the way is when many stocks started to turn around. You know, this has just been kind of marching very calmly up the hill, this Broadcom. And then, you know, we had an earnings announcement. Things went well with that earnings announcement. You know, it beat on earnings and it gapped up. And now it's come all the way back down to this 30-day moving average, which has been acting as a support level, you know, since it crossed this line back here in April. And so what's the advantage of buying something when it comes down and bounces off a support level? And when we zone in, yesterday could have been seen as an entry because we had this 2-day pattern called a Harami pattern at a support level. And this Harami, bullish Harami, doesn't require confirmation, but we have, you know, a bullish engulfing pattern happening today. So if we look at this and say, okay, we would like to add this to our portfolio, how much can we afford to add? Well, if I bring my calculator back up and say, okay, I can have a $25,000 position. This thing costs $337. I can buy 74 shares. And if you can't buy 100 shares, should you just say, well, I'm sorry, I can't trade this stock? Well, no, you could buy 10 shares of something or 1 share. And then where might we put our stop? Well, what's our recent low? Like today, will it hit a low of 324.50? So we're going to buy 75 shares. And we're going to put a stop at 324.50. And we're going to go 3% below that. So 292. Well, let's see. I think I messed that up. What did I say? 324.50 times 0.97. I'll just do it. 314.76. Okay. 314.76 is going to be our stop. 314.76. Now, how are we going to manage these? And someone asked the question, and I thought it was, oops, edit, we're buying 74 shares, right? $74. I'm going to click on this to make the quantities match. Yeah, so that's our $25,000 position. Growth stock, fire in the hole. Okay, so when we come back to the chart, and we've got to wrap up, so I'm going to make this quick, but let's say we had bought back here when it crossed this 30-day moving average and came back to retest. Okay, let's say we'd bought here. Our first stop might have been, let me just shake my Etch-a-Sketch. So first stop might have been, say, around here. And then when it came up and came back close to this 30-day moving average, maybe our rule is we move the stop up when it kisses or when we get a red arrow if it closes below the 30-day moving average. So we would have moved our stop up maybe to around the, 245 level from the 150 some level. And then when it came back here, then we'd go 3% below that low. And then when it came and touched here, we'd go 3% below that level. And when it's been kissing like it has the last few days, we might then move it up. And now our stop, if we had bought theoretically back here, has gone from maybe 150-ish to where we put our stop in today at 314. And so now, what we would be doing is not only trying to continue to give it room to grow, but we're trying to protect some of the profit. And so this might be a daily routine that you look at all your positions. It might be a weekly routine, and it might be a monthly routine. There's no right or wrong. But having a routine is critical. So guys, that's a wrap for today. There's a survey in the chat. And if you're with us live, if you click on that link, there's 2 questions. You rank it from 10, which is I loved it and I'm going to keep coming back, to 1, which was I hated it and I'm never going to see you again. And then there's everything in between. There's also the ability to put comments in. So my promise to you is if you make a comment on what you'd like to see in an upcoming class or whatever it is, I promise to read it, and so will the management team. One of the things that often comes up in surveys is, would you please let me know what you've done? Oh, and you know what? I added this to the wrong account, I think. So we've got a position on AVGO that we just added, and then we added a position on AMAT and a position on Apple. Okay, and those were 3 that we added. 1 we put a target on, which was AMAT, which is way out there. And then Apple and AVGO, we just added as trend trading growth stocks. So follow us in the land of X, Barb Armstrong CS, Kevin Horner CS. please hit the like button. It helps move this up in the YouTube algorithm so more people can find this content. I like to say it's your opportunity to do a favor for a random stranger who you may never meet without leaving your desk. And last but not least, hit that subscribe button. If you haven't already subscribed to this channel, it's another free resource that you can access. And I hope you'll take advantage of the hundreds and hundreds, if not thousands of hours of free content available to you. You can, leave binge watching Netflix and start binge watching some great financial training that could change your future. So take care, everyone. Have a really awesome day. Lots of great content still to come, so stick around. Bye for now.